Welcome to the Achievable FINRA podcast. I'm Tyler, the founder of Achievable, and we have affordable courses for the FINRA SIE, Series 6, Series 7, 63, 65, and 66 exams with industry best pass rates. Each Achievable course includes everything you need to pass the first time. A full textbook, videos on key topics, thousands of questions backed by our memory-enhancing algorithm, and full-length practice exams. You can try it out for free at achievable.me. And if you like it, use the code podcast to get you 10% off at checkout. This podcast was made from a video by Achievable's FINRA course author, Brandon Rith. If you'd like to have the visual aid of a video, please go to Achievable's YouTube channel and search for the video by the same name.
Now that you've learned a little bit about bonds and yields, let's take a look at a practice question that involves both. If you want, pause this video so you can look at the question yourself, think through what you think is the right answer, and then when you're ready, hit the play button and we'll talk through this question together. All right, hopefully you think you have the right answer, and this is not an easy question, mainly because this question tests your ability to be able to translate the language of finance into plain English. Not exactly easy to do. So a trade happens in the OTC market, and that's where we get to the financial lingo of the question. The trade was reported as PDQ 4S M39 at 96. And the question is, what's the current yield? First and foremost, what is the first sentence actually saying here? There was a bond trade that happened. Someone either bought or sold a bond specifically at that price. The numbers they gave us in the first sentence of the question tells us what's actually going on with that transaction and what are the details and characteristics of that bond. So let's break it down bit by bit. First and foremost, PDQ is just some made-up company. On the test, you might see ABC Company, XYZ, BCD. Whenever you see something like this is just FINRA's way of making up a fake company so it doesn't seem like they're picking on a real company. 4S refers to the coupon or the interest rate of the bond. In bond language, S refers to percent. So this is a 4% bond, and knowing that tells us that this is a bond that pays $40 per year, 4% of $1,000. Is that important for the question? Yes, it actually is important for this question. So again, 4% coupon pays $40 a year. M39 relates to the maturity, and that is what the M stands for. So what this is telling us is that this is a bond that matures in the year 2039. That's all it's telling us, and actually that's not important for this question, but it's something they're going to put in this question just to make it seem like it's more important than it actually is. The last number is 96. This is a price quote for a bond. And whenever a price quote is stated like this, what they're really saying is that this bond is trading at 96% of par. 96% of $1,000 is $960. This is another important part of this question, and you need to know that information in order to get to the right answer. Now, the question is actually, what is the current yield of the bond? The current yield is one of just a few formulas that I highly recommend that you memorize for the actual exam. The current yield can be found by taking your annual income and dividing it by the market price of the bond, both of which we already know. The annual income relates to the 4S, another way of saying 4%, and this bond pays $40 a year every year to the person that buys the bond. So we'll put 40 in the place of current income. Last, we need the market price of the bond. That leads us back to 96. And again, 96 really means 96% of $1,000. Another way of saying $960. So we'll put 960 on the bottom of the formula. That is the current market value of the bond. From there, you just need to do the calculation. With a little bit of rounding, you should land with 4.2% as the best answer of the four up there. So D is definitely the answer of this question. Now, if you understand the bond seesaw, you could actually get this question right without actually doing any math. This is a bond that has a 4% interest rate and is trading at $960, which is a discount. If you use your bond seesaw correctly, you'll see that any bond trading at a discount has yields that are higher than the nominal rate, aka the coupon of the bond. Plainly stated, a bond trading at a discount, or any price less than $1,000, will have a current yield that is higher than its nominal rate of interest. The coupon, aka the nominal rate of the bond, is 4%, and the only answer in front of us that is above 4% is D, 4.2%. Many times in a question like this, knowing the bond seesaw will help you at least eliminate 1, 2, or maybe even 3 of the wrong answers. And sometimes in an example like this, you won't even need to do any math. And either way you'll do it, you'll land on the right answer.